Absolutely.
It's
Okay,
perfect.
so I'm gonna start in reverse order this week, only because all the action this week is on digital oil, um, and so I'll address uh, the carbon digital exchange first. Um, so I have some calls over the weekend um, that I'm not sure when they'll come in, but I'm going to be speaking to the chairman and the CEO of DMCC, Ahmed, about Climate Week. So I've been waiting to get this in place. He's always traveling. He's very difficult to speak to, but he's in. It turns out he's in Hawaii on vacation, so I'm hopefully going to pin him down and have a final call about that. So I'm excited, and that should kick things off nicely. And that's really all the update I have for a carbon exchange for the moment. And then Aqua obviously is live. Zero Block is happening, and the website got launched. Looks great. Thomas has done a great job with getting that all in place and everything else. Um, there's always some tweaking and stuff going on, but um, that's happening. And then I think, I will be, have not had a chance to speak to the trade, the fish traders yet. But that's coming this next week as well. So over the holidays, I'll be speaking with them and getting calibrated with them for, first part of January. And so that's exciting. And they're all there. There's a bunch of things happening in that industry and market. Um, uh, that's good. There's a lot of additional work going on in Europe with some of the larger salmon producers and some of that fish protein. So it's good. And there's some stuff in Asia going on that I'll report on next year. That's big. China's ramping up production, and there's a bunch of new technologies coming online. We have some of our own that we've aggregated and curated for Ghana and the other countries in West Africa when we get to that point. And that's a good segue for me to talk about um, kind of the architecture of the projects now, because there's been a lot of we've had a very busy week with digital oil, and there is the need now to accelerate one of the things that we were contemplating in phase three, and I think we're going to proceed forward by the moving the regulated offerings into the phase one stage of the projects versus waiting for. So we're gonna move the regulated phase three opportunities into phase one and have them run simultaneously along with the digital at the same time. And the reason for that is because there's been a lot of movement in the oil industry this week, especially here in the United States. And the reality is there's been some significant industry indicators that are causing this to happen. So obviously, West Texas intermediate crude has for the first time in several years fallen below $55 a barrel. So that's not bad news for us. That's okay news, but it's kind of the Mason-Dixon line or the Rubicon line for what independent producers and private producers can be sustainable, because if oil drops below 55, there's only a $5 a barrel cushion or margin before it hits 50, and 50 is the kill point to start shutting wells in, and that is going to have a significant effect on what's going to happen in the oil industry, especially here in the United States. And mainly, this is the reason for kind of the adjustment of what I'm talking about, and how we're going to take advantage of these market conditions, because these don't come along, very often. They come maybe once every 4 to 5 years. And again, if you've watched Landman or you understand anything about the industry, they always refer to it as a boom bust cycle. And we're in what's called a bust at the moment, which sounds a little bit, scary, but this is all, planned, right? This is the price of oil is controlled by a cartel, OPEC, and a lot of the Middle East players do this. So this is not, like having free stock markets and having free capital markets is, true to, global business and capitalism, but it's not truly all free, right? There are influences, and there's buttons and levers that get pushed and pulled to create these things that happen. And so we're seeing a super cycle happening. This is why Bitcoin is down where it's at. You saw that rebound a little bit yesterday, or starting today. Oil is down. Gold and silver is way up. And these are all global indicators of where the economy is going. And there's many different reasons that it's happening. We track all this and we understand it all. I'll remind everybody who doesn't know, I've been a licensed financial and insurance professional for 20 years. I surrendered my licenses after SEC, just because I don't, that part of my life is a different chapter now. So, but I was an investment advisor. I worked at 3 hedge funds. My superpower was structuring products and creating derivatives off of commodity assets. And that's why I do what I do now for us. And in my administration and advisory role, I spearhead that portion of the program for all the projects, and always have. Even though I do have a firm love for mining and gold and precious metals and minerals, that's I get my hands dirty there. Not so much on the oil side. I look forward to doing that, but that's really Roy's department, or has become his department, due to the things that we had to do in the legacy. So with that said, there's a unique opportunity brewing in the oil and gas industry, and really what's happening is the industry is strained because of the price of oil, and again, it's at multi-year lows right now due to the oversupply that OPEC is flooding the market with, on purpose to push it down even further. And what happens in these cycles is a lot of the independent operators get flushed out, right? They can't, especially those that are over leveraged. So you've got like 2 types of operators in the oil and gas industry. You've got those that are basically, and this is the vast majority of them, are highly leveraged in the business and are holding on by their fingertips. But they may be spending $30 million a month, but they're making $31-32 million a month. So their margins are pretty slim, but they're dealing in big numbers. If they get too over leveraged, they won't they won't survive this cycle. And again, what seems to be the track record, I'll refer back to 2015, 2016, and I'll refer back to 2020, 2021 are the two past cycles that have taken place for anyone that cares or wants to do their research. And again, if you remember, we had a legacy project right in that bust cycle of 2020 and 2021. And so what that allowed us to do was to acquire distressed assets. And at our peak, we were over 200 wells. We're nowhere near that now because of what happened. But and that's just because obviously, timing and circumstances and all those things. But we've been watching this and seeing the trajectory of it, and then realizing like, hey, this is just like last time. So it's almost like we're entering into this bust right at the same time that we were entering into it on the last go around. And we had our first experience in acquiring distressed assets in particular parts of the country. And again, what's interesting about that now is that we're much smarter. We have more experience. We've done it before, so we know what to look for, and we're much more integrated into the industry. So we've got our own players in various parts of the country: Ohio, Pennsylvania, Oklahoma, Texas, Alaska, and so we're well positioned to be able to lean on this network going forward because we did it before. So what we're doing now, and when we did this back in 2020 and 2021, we got over 200 wells, and that was, you're like a mid-tier producer with 100 to 150 wells. You're not some small time. You're in the mid leagues, not the big leagues, but the mid leagues. And I see with this cycle, digital oil could easily go to 2,000 wells. And the reason for that is because two things. One, we have a very unique strategy for natural gas wells that most others don't. I can't really get into a whole lot of detail about that now, but let me put it to you this way. One of the issues in the natural gas business, and that in our past project we owned 100 and I always get this wrong. So Roy can correct me if I'm incorrect, but I think it was 150 miles of natural gas pipeline. I think it was like 146 or something like that. It was right around there.
127, Chad.
Okay, sorry, 127. So I overshot again. I gotta burn that in my brain, Roy. Anyway,
no problem.
And that's part of a bigger network of pipeline, yeah.
It is. In fact, we're positioned when the time is right to come on and actually offload onto the big pipeline, which is we have to overcome about 750 pounds of pressure, which is immense. I mean, a unit for that's about $1 million just to get a pump to do that. But we're positioned for it because it was actually in the pipeline prior to. So when the time's right, we're going to fire that back up and empty into the backbone of the natural gas industry, which means that we'll be able to bypass the midstream and go straight to downstream.
So
more profit.
That really makes us a midstream player. Is that a fair statement?
It absolutely is. Yep.
Okay, cool. So what that means is that's basically, there's a couple different things in the oil and gas industry, right? You can pump a well, and then you can store that crude that's coming out of the ground in a tank, and then they can send a truck to come pick it up and take it to the refinery. In the natural gas business, same difference. You can pump the natural gas, you can keep it in a tank, and then they can come pick it up with a gas truck, or you need to be hooked up to a pipeline so that you can free flow that, and that's metered, and then you get paid on that those metric cubic feet of gas being put through the pipeline, MCFs. So what's interesting in the industry is that not all natural gas wells are on pipelines, and when those wells get older and they stop producing the same amount that they used to as they get a little bit more mature, they can be reworked and you can re-enter them and increase the production. And that's also part of the project roadmap and we've got crews that can do that. But the industry, that's what's happening in the industry now, is that there are a lot of folks that, have a lot of these, let's call them, independent natural gas wells that are sitting there that are not hooked up to infrastructure. And so once you get to a particular production point, it doesn't make economic sense anymore to keep that well producing, because you're not generating enough MCF metric cubic feet of natural gas to sell, because operating the well is more than it's producing. So at that point, it just becomes the loss of diminishing returns, and they shut it in. That doesn't mean that the well is dead, right? It still has life. But the problem is that you then have to come in, you have to re-enter that well, you have to increase the production, and then you have to have a plan to hook that up to infrastructure so that you can get it to the refinery, efficiently and make that profitable. And so in that process lies the opportunity for us and for what we do. And so that's part of it, not all of it, but part of it. And so when you see, because again, whenever you're drilling for crude oil, you have gas. They go hand in hand. There's no two ways about it. If you're producing crude oil, you have natural gas. If you're producing natural gas, you have crude oil. And it's a balance between how much of this commodity and how much of that commodity. And again, so just for us laymen's, us everyday folks, let's just say what's the difference? So the question becomes, what's the difference between a natural gas well and a crude oil well? Well, if it's producing 51% crude oil, it's a crude oil well. If it's producing 51% of natural gas, it's a natural gas well. But it also doesn't mean that it doesn't produce the other commodity, right? And that's where Roy has been, educating us and showing us these tanks that are the separators once it comes to above ground. So just to harken back to that. But again, at the end of the day, we have a strategy to start to put some of those, what they call in the industry, stripper wells, which stripper wells are like they're just still, stripping a little bit of production along, and but it's low. It's like 5 MCF or less. It's 5 barrels a day or less. And then the different performance of the wells starts to increase, between 5 barrels to 10 barrels, from 10 barrels to 15 barrels, from 15 to 20 or plus. And again, there's a lot of different. This is not like a standard equation or a set model, because there's lots of different factors. There's what shale are you pulling from? So geographic area matters, the infrastructure matters, the equipment matters, who's operating the equipment matters. So all these things matter and factor into the health and the production of a well. So again, one opportunities that we have. One of the opportunities that we have. I'm sorry, is my microphone? How's that? Can you guys hear me again?
Yeah, it's working.
Okay, sorry. My screen changed for some reason, and I was trying to figure out why. It's muted again. Okay, I'll stop touching the screen. Anyway, so the bottom line is that what I'm saying is that the industry has entered this has dipped down and with West Texas Intermediate crude hovering around 55, 56 per barrel, as of the middle of this month, that's near multi-year lows. So it just inevitably starts the process for smaller producers to start to have to decide whether they're going to stay in the game or not. And this causes a glut of production to come up for sale. And so this creates an opportunity because we can acquire production wells at discounted values, and often much below replacement costs. So similar opportunities in past downturns have paid off for those that were smart enough to take advantage of them. And our legacy project was one of those real world examples in the 2020, 2021 downturn, where I think oil went to like $26 or something. It was like way low. It's crazy. So we were able to acquire and aggregate up to like 200 wells pretty quick, because there was a lot of sellers on the market, and we were rolling along, and we were in it was a buyer's market. That's what's happening again. There's a buyer's market happening now, and a lot of people are basically saying, okay, enough of this. I can't continue to maintain. So I've either got to lay off some of my production to stay afloat, or I'm just going to exit. And then with that, there's a lot of merging. And I told you guys 2 calls ago, I believe, that we were already talking to the U.S. royalty holder about a merger in the Midwest. And so some of those discussions have increased and have taken kind of a front row seat to what the priorities need to be for the projects. So we have officially engaged with a company called Commander Energy out of Wyoming to joint venture and start to take advantage of some of this market opportunity. And so we, in addition to that, are accelerating the Reg D offering that we were contemplating in stage 3. We've now moved it to stage 1. And we're doing it now. I can tell you that Commander has already engaged Red Rock Securities out of Arizona and Colorado to produce the offering documents. And the first version of this is we're going to raise $10 million. The first $5 million will be secured through oil and gas equipment. And the second half of that 10 million will be unsecured, but will yield a higher rate of return. And then there's going to be a third option that's going to be the opportunity for people to get involved at a well interest or an ownership level. We've had a number of different. Damn it.
No, it was working. Now you stop the camera and night's perfect.
It's okay, and you can hear me?
Yeah.
Okay, good. Because when I'm on the other screen, I can't see the camera, so I can't. Anyway, so the first 10 million that will be raised will cause quite a cascade of activity in what we call the scoop and stack of positive cash flow assets in namely Oklahoma. We're not regulated there, but we're the most experienced and integrated there through Roy and through our team. We also have an East Coast royalty holder who's very active in Pennsylvania and Ohio. And he owns the principal there owns some of the original Rockefeller wells. So that's why I talk about that, because he's acquired part of one of the original Rockefeller oil fields. And we will be reworking some of those wells with him throughout the project 10 years. He's also, just on that note, he's also finalizing his in-ground reserves from the geologists that he's been using. And I'm told by January, probably next week, but certainly by January, we're going to have that reserve report that I think I've mentioned before for 5 to 6 million barrels that are in the ground. And that's going to help support oils, the stable coin, which is good. That's been taking a little longer, but he's wanting to make sure that he's got, and I'm instructing him to make sure that we've got, a second opinion, and that it's, something that we can really hang our hat on, so that it's not, just talk, right? So that it's actionable stuff, which is great. And he's one of our earlier, supporters, in the comeback story. So, we're remaining loyal to them, although, there's, a laundry list of operators that we've reached out to and started, and I said between 10 and 50, and the list is literally thousands. So what's happening now is we're prioritizing these discussions to say, okay, who has attractive production for us, and how can we assist Commander in acquiring that production? And then we're putting the JV is that the U.S. royalty holder will be hired to do the servicing of all those wells for Commander. And so there'll be a pretty robust servicing and oil production operation, at least in Oklahoma. But very, very easily, we could be branching out depending upon the opportunities in Texas, Permian Basin, and in Ohio and Pennsylvania. So we'll see.
Chad, the lower part of Kansas as well, just above where the operations are now in the Wichita area, due to the pipeline that crosses the border.
Yeah. So thank you, Roy. So that's important to understand. And Roy's got more of the specifics on the actual stuff, and he's got the experience to basically help. But we're working with specific advisors and people that are loyal to us, and that we have. We've also recently in helping negotiate the joint venture with Commander and the referral of Red Rock Securities to the team. I will be intimately involved in that process. And then we've also recently, just this week, we engaged a 30-year expert in production who kind of acts as somewhat of a landman for us, but he's an independent contractor, but he's really good, and he's been doing this for 30 plus years, so he knows where all the bodies are buried, so to speak. So, and then we have our own legacy guys, like Matthew, who looks after our stuff every day in Oklahoma. That's still there. So this is good, and the reason why this sets us apart from other folks is because, we live and work, not me personally, but we live and work alongside these folks. So they know the families, we know our neighbors, the people that we have on our team are neighborhood experts, so to speak, specialists. So they have to, so they know, where the pain points are. They know who's hurting. They know who needs help in maybe laying off some of their production. And they also have the influence to be able to negotiate and say, we don't want all your crap, but we want some of your good stuff too. So we'll take some of the stuff that we can, maybe look at long term, but we need a really good deal on this. And that's partially what the use of funds will be from the Reg D, from the registration with the SEC offering. I'll just give you like a little bit of an area to help you understand what it is that I'm talking about. So when you drill a well, it costs somewhere between, $200 to $250,000. These are just very, very, general averages, right? It always varies. Some of them could be cheaper, some of them could be more, but let's just assume that the intrinsic value of one of these wells. So when you're driving down a country road and you see a pump jack sitting there, that costs somewhere in the neighborhood of a couple $100,000 to create. That is the goodwill value and the intrinsic value of that asset, right? So those that are producing are a factor of discounted cash flow. So what that well is still producing without any rework or any attention or TLC, is a factor of that when you're offloading some of these assets. So I'll give you an example. If it costs $200,000 to $250,000 to create, we may be able to pick up those assets, or Commander will be able to pick up those assets for somewhere between $65,000 to $85,000. So it's about, roughly a third of what it costs to create. And then it has ongoing cash flow. And a lot of these wells still have 10 to 30 year life expectancies, depending upon the engineering and the geo work that's done to see how much the reserve is. And then there's a whole complicated process of going through and figuring out, do we want to rework this well, re-enter it? Do we want to re-drill it so that more oil can come up? Can we increase the production? So all that's, very technical. These oil and gas transactions are highly legal, highly lawyered, and the paperwork is, confusing and complicated. The know-how on how to address these distressed assets. And when you say distressed, you mean the operator is leveraged so they don't have the amount of money to continue to operate all these assets. The assets themselves might not necessarily be distressed. Some of them might be distressed. They need some TLC. The pumps are on their last legs. There's different things that need to be done, but you need to be able to come in there professionally with a team that knows what they're doing and assess these things properly so we can figure out where the truffles are, right? Sniff them out and say, look, this well is a good one. This will be a producer, but we've got to get it for a specific price. And then we've got to earmark a certain amount of TLC money for it to turn it into even a better producer. So this stuff's all like, pretty technical. You also have to factor in the maintenance and long-term stuff, but that's what we do. That's how we were successful before, and we're going to replicate that yet again, because again, this is the brain damage and the heavy lifting that no one wants to do, and we're not afraid of the work. So we will go do the work, and then we will bring the results to the project. Now, let me
to help bring that into kind of common language. When you go buy a brand new car, or excuse me, not a brand new car, but a used car, one of the things that you like to look for is did they do a 103-point check on the car to make sure everything functioned properly, or did they determine what needs to be fixed on the car? That's one of the things that we do for Commander in their process of acquisition. Is we actually go and do the check on the wells, the infrastructure, the offloading, all of that stuff to determine what needs to be fixed. Is it something that's viable? Is it going to cost more than it's worth? So on and so forth. That then allows us to provide the reporting to Commander so that they can make an educated decision on whether they want to move forward on those assets or not.
Great. That's a very good point, Roy. Thanks for bringing that in. So, so what we're saying here is we've seen the market in this, kind of cycle that's now happened every, 4 to 5 years, and we know exactly where we are in that cycle. We can see it happening. We know kind of, projecting forward what's going to happen. All the research we're doing is showing that, the price of oil will pretty much stay where it's at and will increase through 2026 slowly. It's somewhere between, whatever it is, 50 and $60 a barrel. Maybe it goes a little bit higher. Nobody has a crystal ball, so we don't know. But what we do know right now is that when merger and acquisitions or M&A activity takes place in the financial world for commodities, this is it. This is the reason why we have to accelerate this. This is the reason why we need to We need to get this JV, finalized, which it is, and then the engagement of the securities firm, and then start raising private money, and from people that want to take advantage of the oil and gas industry, and that can weather the storm, pick up the distressed assets now for really good market price, and then hold out for the price of oil to come back up, just like it did last time and the time before and the time before. And so this is where a lot of the value is created. So one of the interesting things, so this offering will be available to anybody that's interested. The option C is what I'm excited about for us and for the community, because what we're going to be able to do is we're going to be able to make 1% working interest slots available to folks that want to participate on an ownership level. So if you want to own a percentage of a well royalty, that's coming. The other thing that we're going to do is we're going to structure it in such a way, because there's a whole other community out there that's unlike us. We're on the digital side, but you have to understand that in the traditional sense, there are lots of oil and gas investors that put money out all the time in the hundreds and hundreds of millions. And we're going to tap that because this is the time to do it. And again, you've got to have the structure and the compliant process to do it. So there are hedge funds and people that I've dealt with my entire career, other pools of money that they're not interested in digitizing rewards. They're not interested in owning any part of the oil wells. They're just interested in saying, I want to put money out and I want a return on my capital. And the oil and gas industry, like the real estate industry, is a massive industry, especially in the United States. So we're taking advantage of that now. That is going to benefit the digital side, and this is part of our secret sauce, right? Is the balance between physical and digital. That's what Roy and I have always talked about, and bringing these two worlds together. So creating that bridge is what we do. That's at the heart of what we are, right? We're taking the traditional business and we're bridging it. So imagine if you have best of both worlds, right? Imagine if you have a fixed return coming from a hard asset. That's you have a ownership in an oil well, right? And you also become a royalty contributor, right? So you contribute part of your physical oil royalty to digital oil. And so we're through this process and accelerating this, we're going to start incubating our own royalty participants and commitment holders. Because if you think about it, if we're selling off specific percentages in these physical assets, and the way that we're structuring it, and again, there'll be a full proper document to review and understand, but just high level for this conversation is that when you acquire your working interest in one of these wells that Commander is going to acquire, and they'll be putting out royalties for the next potentially 10 to 30 years, and each well will have its own kind of write up and stats and all that stuff, so people can decide what makes sense for them or what doesn't, or if they just want to be put into a pool. We have that organized as well to just take out all the technical issues, because again, therein lies the opportunity, right? Is that we're willing to do the hard work, the heavy lifting, the brain damage to make this streamlined for people to just say, look, I want to buy a UNFT and I want to basically earn rewards, which is basically indirectly affected by the oil production industry. Right. So this just brings in it. And the original reason why I put it in phase 3 was because I didn't really want to confuse anybody, because it starts to get a little bit layered and a little bit complicated. But if you really look at it, it's pretty straightforward. So there'll be the chance to become an equity owner in an oil well. And then in when that transaction happens, the first year of that oil well's royalty goes to basically digital oil, which then allows the equity owner of that percentage to become a field operator in a sense. So those field operator UNFTs that harvest at 100%, right? That harvest at the base, the midpoint, not the lower end, not the higher end, but right in the middle, that we use to attract other operators and bring production on. They will become their own, field operator in a sense, without ever having to touch a wrench or do anything, because they'll be an equity owner in an oil well, and they'll be getting two bites at the apple. They'll be getting the physical asset producing for them, and they'll have the digital asset producing for them. Because once you acquire your field operator NFT, UNFT, it's into perpetuity. It just can, because you've acquired it, and we don't sell those. We only take them in trade. So that's the reason why it'll be put this way. But I'm excited about it because it really is, a game changer. Nobody has done this in the industry. It's never been done before. So people are going to realize, like, not only are you earning a physical royalty that, checks go out, biannually. The industry norm is monthly, but that's too much brain damage for the amount of people we're talking about. So we're going to structure it a little bit differently. It may be quarterly, but I think biannually is probably more realistic. But nonetheless, then they'll be able to swap some of that royalty for field operator NFTs, and then you're earning on both sides, right? You're actually earning on the sale of the crude oil to Phillips 66 and getting a check for that. And then you're also, harvesting rewards that you'll be able to swap for oils or USDT. So that's part of our master plan and secret sauce to really, stand out from the crowd. Not that there's a whole lot of people out there trying to digitize and tokenize the oil production industry, but certainly this is one of our name, our mainstays as far as what differentiates us from the crowd. So I'm very excited about that, and so that's what we're going to be doing. So there'll be more information coming, next year about how that's going to work and what opportunities are available. And again, just because of our history and the things that we've done in the past, we want to make sure that we're completely, dialed into the compliance and all of the procedures. And so you can go look up Red Rock Securities and you can see what their experiences are. We'll have more information coming on Commander next year. But this is going to be a really exciting development, and it's going to be, really good. And in addition to that, we're in chat, we're in talks with this also is a prime opportunity. Not only are we out there trying to help Commander acquire production so that we can, involve it in digital oil in the JV, but this also exposes us to almost everyone in whatever market we're going into, because if you're a buyer or a seller, you're now talking, and because everything's for sale. And so when that happens, it creates this cascade effect and allows us to say, this is what we represent and this is what we're doing. By the way, did you know that we've now tokenized this, and you can turn part of your production into digital and start earning off of that as we go. So this is just like the best of both worlds, because we have everyone as an audience, because as Commander is a buyer, there's going to be a lot of people at the table, and we're going to meet a lot more people in a very short period of time. And so, if we have a good close rate or swap rate with some of those field operator UNFTs, we'll be bringing on more production, which is going to beget larger royalties, which is going to beget more burning, which is going to beget, the private rewards held, are going to go up in value. So this is a very interesting, not foreseen development that we need to take advantage of. And so we are, and the process has started, and it's going very well so far. And so we're very excited, and it's just going to continue to snowball and roll over on itself. So, nobody's required to do anything, and just, we wanted to bring that. But again, it's all about community, and it's all about the way that we curate this community for digital oil, and how we speak to our friends and family and network and bring people to the table, because what we're proposing, no one's ever done. And again, to be able to have both that digital side and the physical side is going to be a game changer. And again, just like we're doing the oil stablecoin, where we're perfecting the model of how to monetize in-ground assets that has not been done yet, is a game changer. And that's why we're going to be a big deal, along the way. And again, every journey starts with a step, as I've always said. This is not get rich quick. This is not a meme thing. This is slow and steady building. But the opportunity that we have right now with being in this 5-year cycle is where things really accelerate, where they really kind of compound. And we saw it happen. And Roy and I were right in the center of it in 2020, 2021. And we built that into 200 wells. Well, mainly Roy, but I helped, I supported, I carried his bag. And when we got that over 200 wells pretty quick. I don't see there being any reason with the proper resources at hand that we couldn't turn this into a 2,000 well reality in a year. So it's it's an exciting time and a major development if you can't tell. So anyway, if there's any questions, I've got about 6 minutes. I've got kids in town. My daughter's home from college, and I've got to run them around a little bit today for some errands, and then I'll be working over the weekend and just getting more of this stuff put forward. But things are really going to start heating up. So it's very exciting, and we're bringing in the institutional money now as well. And these guys are big, but we're also too carving out space for our trusted supporters and our community to participate and benefit off of this, so that it doesn't just keep going to the industry regulars. But again, it's they both complement each other in a great way. So imagine just having all these new royalty holders contributing, and then having institutional money come and say, yeah, we want a portion of that, and we're always carving out a certain amount of percentage for digital oil, and making sure Commander is aware, they're sold, they believe in what we're doing. Everybody's on board, and now we just have to execute. And so 2026 is going to be it's going to be a rocket. It's going to be fun, and I can't wait to share that with you guys. Thomas?
Yeah, Shad, that's pretty exciting. Thank you for all this information. Always a pleasure to get educated on this specific industry, but also to have those amazing and mind-blowing updates that will really strengthen 2026.
Yeah. So I'll be and again, like I said, brother, this has been just kind of unraveling in real time, and because of what the market's doing, having to respond. So it's it's been really busy. So, but I'll be sending you some information that you'll be able to utilize and put into the MWC Club, and we'll go from there. This is my son calling me multiple times. So,
No, that's great. I guess we are all good. We will let the people digest that amazing information and wish an happy end of this year and enjoy your time with your daughter and the family. It's a blessed time, so we all have to enjoy and we keep working hard and make the things great. So as soon as I finish this call, I will just stop the record right now. I will update